So just type "I need it" in the comment section, or type "demand and supply" in the comment section, and it will be sent to you immediately. So this is a very powerful PDF where I explained everything you need to trade supply and demand profitably, right? If you're a forex trader and you are a friend of that concept of supply and demand, this is that one-time PDF you need to lay your hands on, right? This is Eselsa-FX, of course. So here I was able to break down some vital information as regarding supply and demand. I talked about the meaning of supply and demand. Of course, every forex trader out there knows that supply and demand is the basic and the foundation of every buying and selling. In fact, most trading strategies lies on the foundation of supply and demand, because what moves price up is demand, and what moves price down is actually supply. So the meaning of supply and demand, we talked about it. How to identify valid supply and demand zones, very important. Maybe the reason why you are not making money yet as a forex trader, and the reason why your trading strategy has been failing, stop loss up and down, is because you are actually buying from the wrong demand zone and selling from the wrong supply zone. So here I was able to explain how to identify valid supply and demand zone. Now I also explained the 4 key price patterns that often precede strong market reaction, and then how to confirm a zone using price action and market structure. Price action and market structure is big when it comes to technical analysis. Then I talked about liquidity, what liquidity sweeps are, and how to recognize them in this particular PDF, and then how to spot high probability golden zones. So if you are able to combine liquidity, Fibonacci retracement, market structure with demand and supply, is going to increase your win rate, and your profitability generally as a forex trader is actually going to increase. So let's go down. Let me show you something here. I was able to explain the 4 essential criteria for spotting high probability zones. Number 1, the candle size. Size in this situation, especially if you want to trade demand and supply, the sizes of the candles as they are moving away from the demand zone or moving out of the supply zone matters, right? So size is very important. I'll still illustrate and show you why. Freshness of zone is very important. A valid supply or demand zone shouldn't have been tested before. It should be a virgin and fresh zone if you want to mark out the best zones, right? Now, break of structure. A valid supply or demand zone should be able to make an impulsive move or an aggressive move that was able to break structure to the upside for a valid demand zone, and break structure as well to the downside for a valid supply zone. This is a criteria that must be made before a zone should be called a valid supply or demand zone. Now, risk to reward ratio is also very important. Buying from a demand zone that can't give you at least 1:3 risk to reward ratio doesn't really make sense. So the demand zone or the zone you are buying from or the supply zone you want to sell from should be able to give you at least 1:3 risk to reward ratio is the minimum if you are buying from demand zone. In fact, one of the advantages of demand and supply strategy is the fact that you can be able to get a very high RR trading it. So if you check here now, you're going to see the different patterns that you can be able to spot in the chart to know that this particular place is a valid zone. Look at this rally, drop, and rally. Alright, if you check, you see that when price rallied from this place, it was able to bring structure to the upside. There are other concepts here like rally based drop. So this is rally based drop concept. All these things are patterns that are there in the chart. This is drop based rally. So there are a whole lot of them here. All you need to do is just to go through this particular PDF and see how I was able to combine it properly with Fibonacci retracement zone and then the concept of liquidity in order to get a high probability trade setup. Now, looking at the chart, you are going to see this is SAUSD, and this zone here, of course, met all the criteria for a valid demand zone. This particular area here is a valid demand zone. If you check here, let me zoom in. You check here, you see this rally and then the drop. This is rally, drop, rally, and it's one of the concepts I explained in that particular PDF. After this rally, the market dropped in terms of pullback and little consolidation around this area before price now rallied and moved out of this particular zone. Now, look at the sizes of the candles as price was moving out of this zone. You see that the chart is printing strong bullish momentum candles. Look at how long the candles are. And when this type of move occurs for a particular zone, that means the institutions, the big boys, right, and the big banks were the ones that actually took trade from that area. And those areas are areas of interest, point of interest, or areas of value where price will likely come back again because of the sharp move that took place from there previously. And so I marked out that area. This is a valid demand zone where we'll be looking for buy opportunity. Now, another concept is that this zone should be able to break structure to the upside. If you check, you see that this zone here was able to break this structure to the upside. This place here is a structure, right? It was able to break structure to the upside. That means that this zone is valid. Number one, it was able to break structure to the upside. Number two, this zone, the candles, as they are moving out of these zones, are very bullish, aggressive, bullish momentum candlesticks. Is what the market is printing as it's moved out of this place aggressively. And number two, I've mentioned number one, number two. Number one criteria, it was able to break structure to the upside. Number two criteria, the sizes of the candles are very big, right? These are momentum candlesticks that we're printing. Number three, this zone is a very fresh zone and has not been tested before. And number three, this zone should be able to provide at least 1:3 reward ratio. If you check, if I'm able to take a trade here, I will set my buy limit order here. If I'm tapped in and the trade is triggered, you're going to see that I'm going to get at least 1:5 risk reward ratio. If I zoom this place out, you're going to see, look at it, up to 1:5 risk reward ratio from that particular zone. And the third one, sometimes you have to add the concept of liquidity into it. Now, where will the liquidity come in? Look at how price is actually pulling back. So sometimes we want price to create this false move, right? Deceiving people, the early buyers who actually try to buy here, thinking the market is going to reverse from this place. And this is where early buyers will be trapped in, as they will buy from here, then price will come back and sweep them out. Alright, then before it comes to your point of interest. So if the market actually sweeps liquidity like this before coming to this our demand zone, it is one of the criteria for me to know that yes, this demand zone is a high probability demand zone, because I'm not going to be the liquidity. Liquidity has been swept before it came to my zone. And again, fair value gaps fully everywhere. If you check here, you're going to see that this place here, there's fair value gap here. I know ICT traders, I feel speaking all this together, did you hear fair value gap? You are not actually going to be happy. So before that zone, you're going to see a lot of fair value gaps. There's also another one here. These are the criteria we use to confirm that a particular zone is a valid demand zone. So what do you have to wait? In fact, one of the cons of trading demand and supply is the factor, the waiting factor, that you have to be able to sit on your hands and wait. So do you know how long you have to wait for price to play around this area before coming to tap into this your demand zone? So this patience is what most forex traders lack. They are not able to wait, right, to sit on your hands doing nothing. It feels as if you are useless, as if money is leaving you behind. So, but you have to wait, right, for price to come. Because if price comes here and eventually taps you in, the reward is going to be very high. Look at the risk reward ratio here, a fucking 1:5, and sometimes more, because price might even sweep this place out and continue making higher highs, right, and start pushing price to the upside. So that is it about that. If you really enjoy videos like this, subscribe to my channel, hit that follow button, and then type on the comment section, I need this PDF, then I will send it to you so that you'll be able to study it and then see how you can incorporate it into your already existing trading strategy to fine tune it and then increase your win rate and profitability in the long run.